CFD, contract for difference. Yeah, okay. Sorry, hang on. Okay, so before I start, just a very quick disclaimer. So whatever that we share tonight is only for knowledge sharing purpose, and it doesn't really constitute any investment advice. If you want to know more about these products, you can talk to us personally, and we can let you know more about it. Okay, just a very quick introduction about our company. If you are new to us, so our company, Phillip Futures, we are incorporated in October 1995, and we are a subsidiaries of Phillip Capital Holdings Sdn Bhd, and our headquarters is based in Kuala Lumpur with our mother company in Singapore. Okay, so our company, we are a trading and clearing participant of Bursa Malaysia Derivative Berhad, as well as a CMSL license holder, meaning to say we are a legal broker house in Malaysia, which is regulated by the Security Commission, the Malaysia regulator. Our company, we are the first in Malaysia to come up with these online trading platforms for our traders to trade both local and foreign products under one single platform, meaning to say you do not need to log in and out or have multiple platforms in order to trade both local and foreign products, which is also why we are the most top choice for among the professional traders in Malaysia. And I would like to take this opportunity to extend our gratitude on behalf of my company, Phillip Futures, to our clients. Okay, without you, we won't be able to achieve this. So in 2019, we have got 3 big awards from Bursa Malaysia, being the main one as we are the champion of the best institutional derivative trading participants in Bursa Malaysia. Yeah, so our mother company, Phillip Capital, we have offices and branches at over 14 different countries. Okay, so with that, we covered not only products in Malaysia, we also covered products in Japan, in Singapore, in US, etc., etc. Okay, so just like our company name, Phillip Futures, our main focus is in futures trading, but now we have introduced this new product called the contract for difference. And our webinars tonight is mainly focused on this contract for difference, which is a very great product if you are traders on stocks market. All right, yeah. And our speaker tonight, Bong Jeen Hao, he will be sharing more in depth on how traders can trade and benefit and how to leverage yourself using this contract for difference. So why trade with us? First of all, we offer 24 hours support for all our clients. Okay, so whether you are trading the US market at night and you encounter problems, just feel free to dial into our dealing line. Someone will be there 24 hours to help you out, even in the midnight. Okay, other than that, we also offer latest market updates exclusively for our clients. And if you need advices on how to choose a products to trade or how to trade, feel free to approach us. We are more than happy to guide you through everything. And just like I mentioned earlier, we do not only offer products in Malaysia, we also offer products from all around the world. All right, talk to us and we can let you know more about it. Now, for those beginners, if you are very new to trading the futures or CFD, feel free to approach us for a one-to-one coaching session. We covered from platform coaching, from products, or even on technical analysis if you want us to guide you. All right. And other than that, we also offer free webinars on a monthly basis. Every month we have something going on. It is very eventful. Okay. Something like tonight. And also account opening is free of charge. We just need you to fund in to activate the account, and the money you can fully use it to trade. Now, for those that are interested to open account, and we are still under a movement control order around the Malaysia. If you want to open account online, we have online account opening for you to do so at the convenience of your own home. Okay. Later on at the end of the webinars, I will put a QR code for you to do it if you want to do so. Yeah. Now I will pass it to the speaker of the night, Mr. Bong Jeen Hao. He is the chief trainer of Street Finance. Okay, and he has been trading using trend how to capture a big trend and how to trade by following the trend to capture the big movement. All right. So yeah, with that, I will pass it to Mr. Bond, and he will share more about it. Oh, sorry.
All right. Okay. Okay. Thank you, William. You passed me the presenter control ID, right? Okay. Okay. Can everybody hear me and see the slide right now? If you can, just simply let me know in the comment section by typing 1. Okay, typing 1. Okay. Okay, cool. I see some already. All right. Without further ado, let's just get started. Okay. Now, so tonight's the topic. Okay, tonight the topic we'll be talking about capturing big trends in the market, and this is actually one of the sessions out of the 3 sessions of this CFD uh, online virtual event, and this is the second session. So if you missed the first sessions, you can head over to my Facebook page. It is actually a Facebook Live. So the second session and the third session is actually in webinar form. Second session is exactly this one. Third session, you will have to register for it as well. So this entire series will be regarding CFD. However, some of the tips and tricks and techniques that I'm going to share with you might work very, very well on ordinary shares as well. Okay, so again, I would like to use this opportunity to thank Phillip Futures, okay, Malaysia, for having me here and talk to you, because I have been trading CFD since a couple of years ago, and back then Malaysia doesn't have any CFD provider natively in Malaysia. Okay, so when I know that, okay, Phillip is working towards bringing CFD, okay, into Malaysia legally, meaning that it is regulated by T.E.S.T under the CFD guidelines 2018, and it is being revised earlier last year, if I'm not mistaken. I'm really, really excited and pumped to see this product being brought into Malaysia. So, however, CFD being a good product, we all know that CFD comes with leverage, and handling any leverage product, okay, trading at any kind of leverage product, one thing that we all have to learn, and you will need to learn how to deal with it, okay, is actually the risk part. Because as far as, okay, as far as leverage is concerned, you really need to know and learn, okay, how do you manage the risk from a professional standpoint. Okay, so with that said, let's get into the juice of tonight. Okay, so again, disclaimer, whatever I speak tonight is all for educational purpose only, and it is a pure sharing from my very personal experience trading CFD stocks. Okay, so, and there's no buy or sell calls in this one. Okay, so if you want to seek advice from, okay, ask for a qualified financial advisor. If you want to know more about Philips platform, approach any Philips office, and there are going to be dealers or representatives that are going to help you with your needs. Okay, so with that said, I hope you understand the disclaimer. Okay, and let's proceed. Okay, so just a little bit about myself. Okay, I'm a position trader in a capital market. Okay, focus on stocks, including CFDs of stocks, as well as futures. So these two are the main things that I focus. Okay, I'm the founder and chief master trainer of Street Finance, and I have a signature Street Trader intensive program whereby I teach my students and graduates how can they trade without monitoring and speculating. Okay, so this is something that I do personally, meaning that I don't really monitor the market and I don't do any kind of speculation. I don't speculate penny stocks and all those things. Okay, so again, so you know my style, so that's why I'm going to share with you again from CFD. There's no penny stocks option for you. We are going to learn how to trade those legit stocks, okay, that are being traded by most professionals out there. Okay, and I've been featured in medias and etc. etc. I spoke for investment banks and also Bursa Malaysia, and I'm also frequent speakers in unis and colleges. Okay, so again, if you miss the first part, don't worry. I covered the CFD basics. You can find it in my Facebook page, or you can get the links from your dealers. Okay, I believe they'll assist you. Okay, and let's begin. Okay, content outline. What are we going to cover tonight? The first thing is understand where the big money is. Because if we want, okay, to capture big trends in the market, we have to know where the big money is. Okay, we have to know where the big money is. And secondly, how to structure trading plans with this four-step T.E.S.T process. And this four-step T.E.S.T process is the exact process that me and my teams are using even until now. So that's the exact system, exact steps that we go through every time we want to trade. It's how we structure our trading plans. And last but not least, I'm going to share with you, based on the four-step process, I'm going to share with you also some of the case study on how do we capture the big winner in the stock market. I'll give you both examples from Bursa Malaysia market and also US market. Okay, and all the examples given, they are CFD available for under Phillip. Okay, so with that said, let's continue. So first thing, understand how the market works. Understand how the market works. A lot of people, they don't really understand, okay, how the market works. So if you don't understand how the market works, how are you going to know what kind of analysis is right? Okay, so I'm not going to complicate everything. I'm just going to share with you right off the bat. And what do I mean by that? So over the long term, okay, what affects price? Okay, what is a factor that affects your share price? So over the long term, okay, stock prices, they move based on logic. So if you don't know what is logic, it means fundamentals, put it in another way. So meaning that, for example, okay, for example, Nestle is a great company. After 10, 20 years, this company is most probably going to be still available, for example, okay? And then because of inflation, okay, even if they don't increase their customer base or the amount of products that they have sold, okay, meaning that if they sell, okay, 100 million tins of Milos, after 10 years, they're still selling the exact quantity, okay, their revenue and profit is still going to be higher, because we understand that from a business standpoint, from a business perspective, 10 years from now, your Milo, your Maggi, your Nescafe is not going to be at the same price. Okay, so there is one thing called inflation. So from business standpoint, they will always, okay, transfer the cost of inflation to the end consumer. Just imagine today you are the operator, an owner of a coffee shop. And for example, for some reason, the price of sugar go up by maybe 20 cents, 50 cents per kilo. What you're going to do, I believe, is very straightforward. You are going to increase the price of your drinks. That's very straightforward. Whatever my cost increase, I'm going to transfer that price increment to the end consumer. That's how exactly, okay, business, okay, like them, those good business, even if they don't increase their quantity, okay, the revenue in terms of the figures, the profit in terms of the figures, provided the rest is unchanged, okay, because of inflation, things will go up. So goes because the numbers will become bigger and bigger because of inflation. That's why the enterprise value, the numbers will also go up, okay? And that's why over the long term, okay, over the long term, share price will increase. However, it does not mean that Nestle is a great company. If we buy Nestle shares today, next week it is going to go up. No, Okay, if you think that McDonald's is a good company, it doesn't mean that you buy now, next week or next month, it must go up in share price. Why? Because in short to mid-term, okay, in short to mid-term, stock prices move based on demand and supply. What is demand and supply? How many people want the share and how many people don't want the share? People who want the share are buying the shares. People who don't want the shares are selling the shares. That's what I call demand and supply. And this demand and supply is caused by greed and fear. And the only way to measure greed and fears of the different market participants is through one thing called technical analysis, because you cannot go out and ask everyone who are trading the share that you are trading. For example, if you are trading Top Glove, you cannot ask everyone, how do you think about Top Glove? It is impossible for anyone to ask every market players who is holding the shares or who wants to buy the shares and ask them whether they are greedy or fearful about it. Okay, it is impossible. So that's why the only way to measure this is from technical analysis, because remember one thing, okay, price and volume cannot lie. Okay, price and volume cannot lie. Now, you see, if your expectation is to make money in the next few months, this is what we call short to mid-term. This is what we call short to mid-term. Okay. Now, if you expect to make money, your expectation is to profit in few months' time, then just understand that whatever logic you use in the market is useless. Okay. Whatever logic, meaning that whatever fundamental analysis you apply is going to be useless. Okay. That's why you have to know that if your expectation is to make money in the next few months, for example, or even the next 1 year, please include technical analysis into your arsenal, into your analysis, and it should be your main strategy or main technique in analyzing. Okay, so recently we hear a lot of people talking about the glove stocks because a lot of people are still in the glove stocks. And again, people say, why the share price is going down? Why the share price is not going up? Why it is not bullish? Okay, a lot of people that expect the share price to go up in the next few months, they will bring up a lot of fundamental things like, wow, this company can make a few billions in a quarter. What is the future of this company? How would that perform? It is going to be the most lucrative company in Malaysia. It is going to be the most lucrative industry in Malaysia. Now, don't get me wrong. I'm not here to condemn any ideas. I'm not here to disagree with you. I agree. However, we have to understand that if your expectation is to make money in the near term, whatever logic you use in the market is useless, because over the short to mid term, the market is never logical. That's why you have to use fundamental analysis, and later I will comment more about that. Okay, so understand how everything works. Okay, so if your expectation is to make money in short to mid term, please use technical analysis. And the next question you might have in your mind is, well, Jin Hao, how long is long term? Because for some people, 1 year is long term. Now, for me, anything less than 3 years is not long term. Why? Because if we take the legendary investor Warren Buffett as an example, for him, because he's a legendary investor, I think that it is fair, okay, to use his practice as our benchmark. So, from the perspective of a legendary investor, his short term is 3 years, okay, which also means if your holding power is anything less than 3 years, basically you are not in the market for long term. Okay, this is how I personally view the market. So in the past, I'm also a fan of fundamental analysis, but after that, I understand my personal goal again. Okay, your personal goal and expectation towards the market can be completely different. Sharing from my very own perspective, I want to grow my capital in a faster moment compared to investing whereby buy, get dividend, do nothing, buy and hold for long run. Okay, because I don't have enough money to enjoy dividend. Like if I can build a 5 to 10% dividend, but if let's say you only have 100,000 or 200,000, let's say 200,000, even if you can have a dividend yield, a portfolio whereby the dividend yield is 10%, it is only 20,000 a year. So 20,000 a year is good, but again, it's not a life-changing amount. It's not going to replace any form of my expenditure in any means. So that's why I reckon that I need to grow my capital. So if I need to grow my capital, the only way to go is to trade. Not necessarily has to be short term. I'm happy with any return like 20-30% in a year. So in 2019, I grew my account by 60%, and last year was a good year. I grew my account by 97.28%. So that is, for me, I'm happy for that. My target is only 20-30% a year, but understand that because my expectation is to grow by 20-30% a year, in a professional manner. I'm not talking about using all your money, and hantam into a stock, whack into a stock, and the stock go up by 100%, you double your money. No, that's not the way of managing a portfolio professionally. So in the next webinar, I'm going to share with you how professional traders manage the risk, including risk of leveraging. So if you are into, and you should be into, learning how to manage risk, money management, risk management, next webinar is the webinar that you are going to benefit a lot. And here I would like to just say right off the bat, risk management, money management, these things, a lot of people see it as a very dull topic. And yes, it is not as interesting as finding good trending stocks and discussing everything about the strategy and tactics. That's why a lot of people choose to skip the less, choose to skip money management or risk management topics. Now, if you are into CFD and you avoid learning how to manage risk, avoid this kind of quote unquote not so interesting or less interesting topic, you are going to suffer. The first time I trade CFD, I lost horribly because I don't know how to manage the risk in a better way. So you don't have to go through that if you attend my next webinar. I'm going to share with you how can you manage risk and how professional traders manage risk in a very systematic way. So here in tonight's webinar, we are going to talk about, how can you capture big trend. How can you capture big trend? And of course, that is with technical analysis. So where is the big money? Where's the big money in the market? Because to make money in the stock market, or any market, we need to know where the big money is. So only after, knowing where the big money is, then we can tell, what type of stocks we should be looking into. And here I'm going to introduce you some concept later related to trend following. And right now I'm going to share with you 3 charts, and you tell me where the big money is in. 3 charts, and here we go. This is stock A. This is stock A. Of course, you know what's the stock. I don't need to mask out. Look at the pattern. Look at the pattern. I should have masked out, else you have other buyers coming into it. Never mind. Just look at the pattern. This is stock A. This is stock B. This is stock B. And this is stock C. Now tell me where the big money is. Type in the comments or chat box, or I think it's question box below. Because the thing cannot work. The chat box, I think, in GoToWebinar is not functioning really well. Stock A, stock B, stock C. Let me see Let me pop up the question box. Okay. Okay, so most of you answer, okay, stock B. That is correct. Okay. Now, here I want to share with you a concept called trend following. Now, stock A will always make people feel that this share last time was, okay, let me try to annotate. Okay, pen. Okay, let me try to annotate. Okay, people will feel that last time the share price was here, and right now it is here. It has the potential to go up to where it was. This is what always, okay, people think about, okay, when it comes to finding shares. Okay, however, you gotta understand how trend works. Okay, you gotta understand how trend works. You see, when the stock is trading at this area and it drops all the way to this area, which is the previous lowest point, as far as we can see from this chart, there are a lot of people who think that it has the potential of going back where it was. However, if you believe that, you buy, it will go lower and lower and lower. Remember this, for trends, understand that trend has a higher probability to continue or resumes the direction rather than reverses. So in this case, it has established a downtrend, and that's why we should not be looking into buying these shares. You're going to have terrible win rate of doing this, because out of maybe like you buy here, you buy here, you buy here, you buy here, maybe only one times when you buy here, it can successfully go up by 10, 20, or 30%. So again, there's one thing called winning rate. Okay, there's one thing called winning rate. I'll discuss a little bit more later. Now, stock B is the type of stocks, okay? Stock B is the type of stocks that we want to look into. Okay, stock B is the type of stock that we want to look into. So you see, every time when there is a stock, now I want to share with me, do you have any of these two experience? Okay, do you have any of these two experience? The first type of experience is this: the stock has been falling and you think that the stock is very cheap. You buy and cheap becomes cheaper, meaning that you buy into a share at maybe 6 ringgit, it just dropped to 5.50, 5, because last time the share was 10, it drops to 6. You think it's very cheap, you buy and the share just go cheaper. This is the first type of scenario. Second type of scenario is the share is expensive. You always feel that last week was the best time to buy the share. Maybe last week it was 3. Now it's 3.20, 3.30. Okay, so you didn't buy because you think that you have missed the opportunity. Now 1 month have passed and the share become 3.50 or 4. So you was, if I know earlier, okay, there is no such thing as if I know earlier in the stock market or in any aspect of life. Okay, now if now this is the case, okay, meaning that every time you just find it very expensive, very expensive, very expensive, okay, and the stock just go higher, 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 and higher. Now if you have this experience, okay, type me in the chat box. Okay, if you ever have any of this experience, type me in the chat box. Now if you have this experience, understand one thing: trend will usually resume rather than reverse, meaning that if it is a downtrend, it has higher probability to go down rather than go up. So don't hope that the stock will go up. Buy and hope is not a strategy. A lot of people just buy and hope that one day these stocks will rebound. Okay, and again, probability wise, it has higher probability to go down, and that's why your winning rate of buying into a downtrending share is going to be very, 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 very low. Whereas understand that in an uptrend, the stock has higher probability to go up. So what you want to do is actually look into some opportunity to enter these stocks. Of course, I don't want you to chase high. It's not that it is not doable, but you need to really done professionally. But the best way of entering an uptrending stock is actually to wait for a correction, and when the correction is over, meaning that it starts to show some kind of price action or rebound or recovery after a period of consolidation or pullbacks, that's when you want to enter after that, meaning that it rebound. Rebound is a sign of trend continuation. Okay, rebound is a sign of trend continuation. So that is when, okay, for people like me, we want to look into entering a share. Now, stock C is a typical kind of sideway to, okay, not so downtrend, not uptrend as well. It's kind of sideway. This is the type of stocks whereby for us is a waste of time. Okay, it is a waste of time, meaning that you buy these stocks 1 year ago until now, you don't make money, you don't make big loss, no big win, no big loss. That's all. Okay, this is what we call a sideway. Now, a sideway trending stock is basically taking some time to choose a direction. Okay, to choose a direction. Therefore, don't waste your time in a consolidation period that is too long. Okay, I would say more than 3 months is a little bit too much for me to accept. Okay, so again, this is basically what I can tell you about trend. So trend will usually continue rather than reverse. Okay, and the trend is your friend until it bends, meaning that an uptrend is where it is the kind of trend that you should follow until it starts bending into a downtrend. And there is no too high for a bull, okay, or too low for a bear. There's a typo here. Okay, there's no too high for a bull or too low for a bear. Again, last year when Top Glove, okay, is moving up, no one would expect it will go higher than 20, 25, or even close to 30. Okay, no one ever expect that. Okay, and a lot of people, they are just what, okay, didn't expect that. Okay, didn't expect that. And later I'll share with you a little bit about the trading psychology in the market. Okay, I'll share with you about trading psychology in the market. Okay, so, and again, there is no too low for a bear. Now, who else will actually expect AirAsia X has the day that it will crash and fall below 10 cents? Hey, Tony Fernandez company, okay? We never expect that. Okay, so there is no too low for a bear. Understand this part. Okay, so now this is what I want to share with you. Now, of course, this is one of the most interesting stock last year in Malaysia, and I'm gonna share with you. Now, when the share is trending upward, okay, your strategy should be looking into buying. Okay, should be looking into buying, and the share just go up, go up, go up, and it, of course, it has a retracement, but it does not really cue the whole trend. Okay, and after it continue to go up and down. Now, a lot of people might have this kind of thinking. Okay, this kind of mindset or things will come into their mind, whereby when the share is 7 ringgit, they always think that, yeah, last week I should buy because last week is just 6. When the share is 12 ringgit, they think, yeah, I should buy last week because last week was 10. Okay, a lot of people who don't understand trend, okay, who don't understand trend, will always fall into a trap, because understand that our human nature, we always want cheap. Okay, so that's why when the share price raise from 6 to 7, you find that 7 is expensive because the price tag in your heart was 6 ringgit. So when the price rise from 7 to 10 or 15, a lot of people who don't understand will not want to buy because the price tag was 7 or 10. Okay, and some might be lucky if the stock go down and they're going to collect it. They're going to catch a falling knife. If you're lucky, you're lucky. If you're not, no complaints. Okay, because you're going to understand every downtrend begins with a movement that is trending down. okay, and breaking a new low, new low, and new low. Okay, so you see, after that, when the share price is going up all the way to 28, okay, and it fall all the way down to 21, a lot of people buy. As you can see from this chart, the stock price basically went up despite the volume is not strong enough. So a lot of people buy, that's why it go up. Why? Because right at the top and it falls down, people right now think that the share has a potential to go to 28 again, because they have seen it, so they believe that it will go up. When the stock is just beginning of April or May, if somebody were to jump out and say the share can go up to 20 over ringgit, nobody will believe, unless, well, I don't know for what reason people will believe, okay, but again, people haven't seen it, so that's why people don't believe. However, when the share price go all the way to 28 and fall down, people already seen it. It can go to 28 and then the share price fall down and people pick it up, okay? This is not a way of buying shares or trading in a market. You cannot always see things retrospectively and think that the share has gone to 28. It always has the potential of going to 28. And guess what? Top Glove from there go down, have a bonus issue, it goes down. It has a very mini uptrend from September to mid of October, then fall down. When it is falling down is when you need to start selling, because again, it is probably hinting you the uptrend no more power. It starts trending down, and this chart is dated 31st of December, and where the price is right now. Okay, where the price is right now, we all know. Okay, so again, because it has been in a downtrend, so no question asked, downtrending shares we don't hold. Yes, the company might be great, the company might be making money, real cash. However, from the perspective of people like us who are buying into the share or the share CFD, we want the stock price to go up. If the stock price is falling down, no matter how profitable the stock is, you're not going to make money. Okay. And again, CFD itself is a high leverage product. If you are a trader who don't have a strategy to really know, okay, to really help you to get out at the right and appropriate time, you are going to suffer. Okay, so that's why the first thing is you need to have a strategy that makes you money. The next thing, okay, is a good way of managing your risk and money, and that will be covered in the next webinar. Okay, so in this webinar, right now at this point, the key takeaway is this: trend is your friend. When the stock is uptrend, you have to look into buying after, okay, you have to buy after a pullback. When it starts to turn up and rebound is where you want to look into buying. Okay, you want to buy after, okay, the recovery from a pullback or correction. Okay, so now instead of being okay, pushed around by your own emotion, you need to have strategy. Okay, now the next thing I'm going to share with you is how, okay, can you trade stocks with this 4-step T.E.S.T process. Okay, how can you trade stocks with this 4-step T.E.S.T process? Now, what is this 4-step? The first step is actually trend. Now, again, we should be looking into uptrending shares, because uptrending shares has a higher probability to go up. Okay, I know that a lot of people may not be able to get this, to comprehend this, but again, okay, I want you to do an exercise. I want you to do an exercise. For whatever market you are trading, Malaysia or US, find 10 shares that are trading at all-time high or at least 52 weeks high, and also find 10 shares that are trading at 52 weeks low or all-time low or 10 years low. And after 1 month, you're going to relook into the share. how many of them actually break new high and how many of them move lower. Do this exercise, because a lot of people don't understand why we should be looking into uptrending shares. They will always see, hey, Jin Hao, you always look into these shares. Those shares are so high already. Why are you even asking people to look at it? Okay, it's like when I tell them my watch list, okay, like MPI, like VTROX, like even Mr. DIY. Okay, again, some people think that for Mr. DIY, if you never buy the share, you didn't subscribe and get the IPO, you are done forever. No, if it is an uptrend, you need to have some strategy to enter the stocks. I don't subscribe for IPO as well. Okay, but I'm in it. Okay, so first is you want to look at trend. Okay, uptrending shares. What are the stocks that are uptrending in the markets you are trading? Malaysia, US. What are the uptrending US stocks right now? Okay, and if you're trading Malaysia, what are the uptrending stocks? You need to look at the right stocks before, okay, we talk about anything else. So trend. Ideally for me, the stock is trading at 52 weeks high. That is the bare minimum. Okay, I would say. Of course, sometimes there are some exceptions whereby the stock previously is a good runner, okay, a good rally, and it has been through a period of correction or consolidation, and right now it is moving up. Okay, and of course, I want the share to move up for at least about 2 to 3 months before I will consider enter the stock. Okay, and my favorite pattern is actually stocks that are trading at all-time high. Okay, they are trading at all-time high. So in the US, you can find plenty of these stocks. Okay, what are the stocks that are trading at all-time high region? Okay, maybe like 10% below the all-time high is also good. Okay, so trend is the first one. Now, after you have found stocks that are having good trends, the next thing is you're going to find stocks, you're going to find possible entries. Are you going to enter a breakout or are you going to enter a rebound? Personally, I like rebound. Okay, meaning that I wait for a correction. After the correction, if the stock resumes its trend, okay, meaning that it continues to go up, it rebounds, I will plot my entry from there. Okay, next is once I enter, I must have a predetermined stop loss. Now, stop loss is to prevent, okay, my trades that are going against me, okay, to go even lower. Okay, I prevent myself from possible extensive loss. Okay, so the next thing is if you are if it is hitting your stop loss, okay, that's the end for that trade. You restart the whole process. Now, if the stock move up, okay, you're going to have two choices. The first one is you're going to take profit, or the second one is, which is my favorite, is called trailing stop. Okay, now, so first one, trend. Let's go through. You're going to identify the trend of the stocks. We want to trade with the trend, meaning that we want to go long in an uptrend, or if you like to trade short, you want to go short in a downtrend. You don't want to go short in a downtrend. Sorry, you don't want to go short in an uptrend, meaning that the trend is up, then you go and short at resistance. For me, that is not a good idea. Okay, for me, it's not a good idea. Now, let's say if the stock last time was traded at $100 at the highest point, and right now it has been retracing to maybe 70, 60, and it go all the way up to $100 again. A lot of people will take profit at 100 and then start shorting because that's a resistance. Now, if you do this, I like it or not, statistically, it has already proven in an uptrend, you have to be long bias. If you short at resistance, if you don't know how to cut loss or take the profit, whatever you have, if the stock really continues to go up, you are going to suffer a lot. If you don't understand what I'm talking about, you go and ask those people, okay? Now, it is not something that Philip offer, but use this as an example. It's called Bitcoin. A lot of people, because previously the highest was $19,000, $20,000. And this time around, a lot of people go short at 20,000. and those people are losing more than 50%, that is a very, very bad idea. If the trend is up, you shouldn't be looking into shorting. So we want to trade with the trend. Okay, go long in an uptrend. Okay, so entry. One of the best ways, okay, to position into an uptrend is to enter after a pullback in an uptrend, not during the pullback. Now, I don't buy shares when it is dropping. Why? Because you don't know where it will drop to. Okay, you don't know where it will drop to. What if it never recover from that pullback? How are you going to deal with everything? Okay, so I enter after a pullback in an uptrend because that is a sign that the uptrend is most probably going to continue. Okay, so this is my strategy. And when you're plotting an entry, you can predetermine a stop loss. Ideally, it's not more than 10%. So a lot of people would set a stop loss below the previous low, the pivot low, meaning that the previous waves low, you set below that level. So ideally, it's not more than 10%. So if you're trading a lot of like big caps or mega caps in the US, or even some of the slightly higher price stocks in Malaysia, 10% is okay. Okay, 10% is okay, more than enough rooms for you to trade. Okay, so that is about plotting entry and stop loss. You got to determine a stop loss. Now, for those who like to trade breakout, you might have your own strategy. But again, if the stock is uptrend, has a multiple resistance, you want to trade a breakout, of course, that is also a doable strategy. Okay. Now, stop loss. If your stop loss is hit, meaning that you will exit the stock completely. And you're going to exit the stock completely because that's your stop loss. Now, a lot of people might ask, what if I cut loss and then the stock price rebound after that? Then learn how to buy back. This is better because if you don't have the habit of stop loss, you are going to get stuck easily in stocks that are trending downward. Okay, very simple. Why are still people stuck in glove stocks? Because they never have stop loss. If you have stop loss, nothing is going to be too disastrous. Okay, nothing is going to be too disastrous. Again, if stop loss is never in your vocabulary, you need to be very careful when you're trading with leverage. The only reason why people will get margin call is simply because their stop loss strategy is not good. Okay, I know a lot of people that got margin call last year. Okay, my relatives, my friends' dad. Okay, very simple, no stop loss. Okay, no stop loss plus leverage is the perfect recipe, okay, for disaster. Okay, it's a perfect recipe. Okay, so when I was entering into the stock market, okay, a lot of people tell me a horrible story. Oh, last time 1997, wow, those rich boss in the town, okay, trade stocks until they owe money, they owe bank money. Now I was thinking, how can you owe the bank money? If I buy a share which is 10 ringgit, for example, the worst is I lost all my money. How can it be? Okay, very simple. They leverage. If you leverage without knowing when should you exit, it's going to be very disastrous. Okay, things are going to be devastating. That's how people get into margin calls. That's how people lose terribly in a crisis. Okay, so that's why we are talking about CFD, which is the leverage product. I have to stress the importance, okay, the importance of having a stop loss. Okay, I have to stress. Okay, so next is take profit or trailing stop. Now, this one, you have a choice. You have a choice. Let's say you buy a share at 250. After that, the shares go up to 350 or 4. You have some choice. You have some choices. First is you can take profit. Second is trailing stop. Now, what does trailing stop mean? Trailing stop means you move up your initial stop loss level to a higher point. Okay, with the intention of riding a big trend. Okay, so decide whether you want to take profit or trail and let profit run. Okay, let's say when a share you buy at 250 go up to 350, you can decide whether or not you want to take profit at 350, or you just want to move up your stop loss. Maybe if you move from your initial stop loss of 230, you move to maybe right now 330 or 320. Okay, so if the stock can continue to go up, because we understand that in an uptrend, the stock has a higher probability can still go up. It might go to 4, 5, or 6. So I don't want to take profit at 350. I just move my stop loss up to 320, for example. If anything happens, I'm going to take 320 and run. Okay, this is what we call trailing stop. And this is by far the most important strategy if you want to ride a big trend. Okay, so your first target profit must be at least 1.5 R away from your entries. Now, if you don't know what R is, right now you can understand it as 1.5 times of what you risk. Okay, for example, if you buy a share at 250 and your stop loss is 230, your risk is 20 cents. So your R is 20 cents. So 1.5 R away is 1.5 times of your risk, which is 20 cents times 1.5, and that's 30 cents. So 1.5 R away from your entry is 250. So your first target profit must be at least 30 cents away from your entry, which is 30 cents away from 250, which is 280. Okay, this is what we call, you need to always maintain a good risk to reward ratio. And this will be covered in the next webinar. So again, this is how professionals manage risk. That's the language we use. How many R's? Okay, what's the risk reward ratio? Things of that nature. Okay, so from now you can just comprehend it in this way. It must be 1.5 times away from what you risk. Okay, so target profit. Now for trailing stop, you're going to move up your stops just to trail. Okay, this is the key of riding big trends in the market. This is how we achieve 200% from some of the growth stocks last year, as well as more than 100% in some of the technology stock last year as well. Okay, so again, learning how to trail is the entry pass, okay, to riding big trend. Okay, so let me just give you a few cases study. Okay, now you can use whatever indicators that you are familiar with. Okay, but regardless what you use EMA or MA or whatever, trust me, a lot of times the results is going to be similar. Okay, the result is going to be similar regardless what you use. Okay, the result is going to be similar. Okay, now we all know that in March, okay, there is a very nasty correction last year. So this is NVIDIA. So we know that March there is a crisis. Now instead of trying to bottom fish every time, what we do is we wait until the trend establish itself and starts turning up. You can see that here the indicators I'm using is actually super trend. But whatever EMA or MA or whatever Bollinger Band, whatever thing you use, it should use similar results. Okay, so when it starts to turn up after a correction, okay, we start to look into buying. Okay, so here when super trend turns green and when it retrace and go up, this is when we start buying. Okay, this is when we start buying. So it's about like 270, okay, 270, 300. Okay, so this is when you can start buying. And the thing that I like about using super trend is I use it as one of the ways of doing trailing stop. So this green line can act as a trailing stop. Of course, you can use other indicators like your moving average 20 days, okay, or any that you are familiar with, okay, and then you can trail all the way up, and when it starts dropping and turns red is when you start selling. Okay, For example, here it's like $500 over. So from 300 to 500, okay, from 300 to 500, we are talking about quite a substantial gain as well. Okay, 300 to 500 is like how many percent? Suddenly I cannot calculate. Okay, so 300 to 500, okay, 2 divided by 3. We're talking about 60%. Now 60% gain in about 1, 2, 3, 4, 5 months, I think is good. 60% in 5 months, in even half year. If 1 year I buy a stock, the stock go off 60%, I'm happy as well. Okay, I'm happy as well. Okay, so again, this is the one of the ways of, okay, trading. Now you might ask, what if I miss it? Cool, miss it, no problem. Okay, you see, every time when a stock have a retracement and start turning around, you can look into buying and set a stop loss below it. Turn around, okay, here the stock has a turnaround, okay, here you have another turnaround, here you have a turnaround, okay, sorry for that, here you have a turnaround, here you have a turnaround, here you have a turnaround. Okay, even if you buy at August at about 500, when it go all the way up and start crashing, you start selling, okay, you sell at 520, it is still okay. Even if you sell at break even, let's say you think you're really unlucky, you are really sway, okay, you are really sway lah. If you have a system to follow, you're still going to do okay. Okay, it's still going to do okay. Okay, so again, if the stock is in an uptrend, we should focus on finding entries. We never know how far the stock can go. Okay, we never know how far the stock can go until it shows us signs that it is weak. Like for Nvidia, right now it is a little bit weak, okay, than what we want it to be. Okay, so Nvidia. So again, this is a case study. Okay, so whatever you use, if you have the habit of using a 20 MA or 40 MA or 50 MA, whatever combination you use, it should yield the same result. A lot of people like to be very obsessed. Hey, Jeen Hao, you use 20 EMA or 20 MA, or you use 20 or 25, or can I use 18? Actually, whatever thing you use is the same. You are going to enter and exit at somewhere similar places as well. Okay, so let's look at the next one called Tesla. Now, very simple. If you look at this one, right now, this is where Tesla is. Okay, you buy here, sell here, buy here, no need to sell yet. Okay, so after the previous recovery, now we are trading Tesla actually earlier last year. Okay, this is an adjusted chart, by the way. Last year we entered Tesla at around 400. It went all the way to 900 and start going down. So 400 to 800 plus is also about 100% move. That was earlier last year. Okay, 2019 ends to beginning of 2020. Okay, that was really a great move. But again, back to this one, uptrending stocks, you have a correction and go up again, you can start buying and sell. And the reason one, after sleeping for about 3 months, September, October, November, sleeping for 3 months, Tesla starts making a move again. So if you buy at around 400 over, right now you can calculate yourself. Okay, so Tesla is perhaps one of the, again, this year, 2021, if you ask me what are the shares that we have to watch closely, I would say that Tesla is definitely one of the stocks that you must watch closely. It doesn't mean that you have to go and buy later, okay? But you must have this stock in your watch list. If it is taking a rest, okay? And if it has a chance like this, if it is taking a rest and it have the chance to go up again, that's when you want to start plotting entries and look into the shares. Okay, all right. So again, this is another good stocks, okay, in US. And again, you can look for Phillips, okay? They have a CFD option. Because some people say, wow, $700 a share is very expensive. By the way, in US, minimum is 1 share. Okay, so with some leverage, definitely you can start trading US shares. And for me, trading US shares is more affordable, okay, than Malaysia shares, because Malaysia shares minimum 100 shares, okay, and increments of 100 shares. US, 1 share. Okay, so next one, let's look at this one called Avago. Okay, so again, you can see that it recovers pretty well, okay, in after the last year, the March crisis. Okay, so again, here it starts to turn green. Here you have a turnaround. This opportunity to buy the stock at around 260 ringgit, $260, $280, and it go all the way up for a while. It goes sideways. So if you keep holding these stocks, also no problem, because it does not hit our trailing stop, and it go up again. Okay, it go up for a month, sleep for 1.5 months, and then it start turning down. You can sell and buy back later. Okay, so right now, Avago is still a stock that has relatively strong trend in the US, because right now in US, a lot of mega caps that we are familiar with, like Microsoft, Facebook, the trend might not be as good as Avago, okay, or maybe Tesla. Okay, so by the way, Avago, I think the name already changed to Broadcom. Okay, Broadcom, but the code is still AVGO. Okay, so again, this is definitely one of the way you can do it. So you see, if it turns green, it go all the way up, come down, and it turns around at around $400. Okay, previously it turns around here, a mini turnaround, mini support, and the next support is here. With the super trend intact, you can buy a rebound based on that, and it is still within the 10% stop loss range. So this is how we trade US stocks. Okay, you don't have to trade, okay, like go in and out like every single week or every single day and make yourself very busy. If you know how to utilize trend following strategy, okay, you would not need to make yourself busy, okay, and pay a lot of brokerage fee. Because if you trade very often, you're going to pay a lot of brokerage fee. Honestly speaking, when brokers see me opening account, they are not really happy, because the frequency of me trading is a lot less. Okay, sometimes I buy a share, I can hold for 3 to 4 or 5 months or even longer. So again, our priority is to make sure we make money. Okay, so if you find a good trend, learn how to let profit run, okay, and hold it tight. If you have concerns that the stock is too hot or too high, like some stocks, definitely it can become too hot when it's all the way at the top. What you can do is actually you can sell partial, meaning that if you have 10 shares, you sell 5, or you sell 6, or you sell 8. You take most of the profit and leave it there. Okay, leave the rest there. Okay, so this is also one of the ways that you can control your position. Okay, so next we look at Hata. So again, if you look at this chart, okay, by the way, I bought Hata last year at around 679, if I'm not mistaken. I personally bought Hata at 679. Okay, so it was somewhere around this region. Okay, of course I do not follow super trend. Okay, I use normal your usual EMA, or the way I look at higher high, higher low, and all those things. I entered at 679, if I'm not mistaken. That's my average price, and it go all the way up because it does not really break previous low and this trend. Okay, and after it start falling. So when it starts falling, okay, personally I was late in selling, but again, it's still an overall very profitable trade. Okay, some of my students, they are in other glove counters, they are even more profitable. Even if you're in Top Glove, you are more profitable than buying Hata as well. Okay, so again, this is a simple system you can use, okay, that I can suggest you to start using it. Okay, so you can use, this is a chart by TradingView, and Super Trend is free to use. Okay, just search super trend, pick the first one. Okay, that's how you can start. Of course, you can still use other combinations, like maybe you like to use whatever 20, 25 or 30 days, or you use Bollinger Band or any other things. You want to add your MACD, up to you. Okay, but the key here is trend. Okay, trend. So set a trailing stops or stop loss at the point where the chart turns sour. Okay, so here is when you should really start selling the share. Okay, so after that it goes back up. If you buy a rebound here and it go up and boom, go down again, so this might be a slightly losing trade or a break-even trade. Okay, so again, if you follow a system, okay, and you have a proper stop loss, proper strategy, you're not going to lose a ton. Okay, you're not going to lose a ton. Learn how to capture big trends, okay, and learn and understand that not all trends can last very long. If it turns red, please follow whatever rules. You can always buy back later if it decides to re-establish the uptrend again. Right now, overall, this stocks is weak. Okay, so that's why we do not look into buying as well. Okay, now next one, just quickly go into stocks that are uptrending. Okay, stocks that are uptrending. So for VTROX, okay, VTROX, sorry, not VTROX. Okay, for VTROX, okay, you can see that the beginning of uptrend starts around April, May. Now, of course, this stock is also a previous runner, meaning that it has been going up in the past. I cannot show you the full chart, but again, one of the criteria of me choosing uptrending stock is that stock ideally have to be previous or former runner, meaning that in the past it must have, okay, a record or history of rallying, meaning that it go up in the past as well for 100, 200, 300%, for example. Glove is one of the sectors that has previous, okay, history of rally as well. Okay, so and you can see some of the stocks. Okay, if last time, okay, the stock used to be a pump and dump play, it is very likely to be a pump and dump play in the future as well. Okay, so that's why I believe you understand what I'm talking about if you're in the share market. Okay, so same goes to this one. Previously, it is a runner for all the stocks that I mentioned just now. Hata previously is a former runner like many years ago. Okay, Avago also. Okay, Tesla all the way up. Nvidia, no need to say. Okay, so VTROX is definitely a former runner, and what we can see is the stock start turning up. Okay, you can start plotting entries all the way up, and you just trail it. So this stock has been sleeping for 2 months. Okay, we don't know what's next, but overall the long-term trend is still bullish. Okay, so should the stock has a price action that go up again, okay, we might want to relook into this stock. Okay, so some I know that a few of my students are actually still holding this stock because it hasn't break any kind of support. Okay, but breaking this 14 support right here may not be a good one. Okay, may not be a good one. So again, okay, it depends on for those who are in these stocks. Of course, I would say if you have other candidates you want to enter, of course you can enter. Okay, but if you want to keep holding, you definitely can keep holding because the share, technically speaking, it still has some room and opportunity and chance to go up. But again, you have to put your trailing stop at the right place. So in this case, you can put your trailing stop at the green line right over here. Okay, so this is VTROX again. Okay, we have been starting to look into this share like 9 and 10 ringgit over here. Okay, it's already late, but again, from 10 ringgit to 14 ringgit is another 40%. Not too shabby. Okay, not too shabby. Better than those people who look at the wrong share and every day ask why this stock go down again, why this stock go down again. That is for me, that's not a strategy. Okay, the strategy, okay, that we use is trend following. So we just follow the trend. Okay, so learn how to look at stocks that are going up, okay, and they are moving instead of asking why the share they are previously going up and you buy right now, why does it come down? even if you found the answer, it's not really helping. Okay, it's not really helping. So yeah, rather understand that stocks move in cycle. Okay, sometimes the stock just go down, and be in a downtrend, we just exit the stocks and shift our attention to stocks that are moving, that are going to potentially make us some profits. Okay, so next one is, okay, this one, MPI. Okay, so MPI is also have been a really good technology play, okay, in Malaysia. So again, of course, sometimes okay, when you look at certain indicators like this one, it may not be a good one, but you can use your normal indicators like the moving average. Okay, you can actually see that the stock is a good one. Trend all the way up. Here it hits a support. I forget is which EMA already. Okay, and then it go up. Okay, you can trail all the way up. Okay, and it's still moving. Okay, so this is also one of the way. I think personally, I only started looking into this share somewhere around 17 to 18. Okay, so 17 to 18, a lot of people think that is very high already, considering that the stock moved from like 8 ringgit to 18. It's like more than 100% gain already. But again, trend. Okay, trend. I don't see things retrospectively because it is pointless. What I see is I understand trends, and I know that in an uptrend, it has higher probability to go up. So that's why 18 to about 24, 25, okay, we are talking about quite a good amount of like 20, 30% at least of gain as well. Okay, so these are the case study that I have prepared for you. Hey, these are case study that I've prepared for you, and that would be all for me. And the rest of the time, okay, I think we have like at least 10 over minutes time for Q&A. I'll pass the time, the presenter, back to William. Okay.
Okay.
Yeah.
Okay.
Can you take back the presenter control?
Yeah.
Okay. All right. Good.
Okay. All right. Okay. Thank you, Mr. Bong Jeen Hao, for the sharing. So now will be the Q&A session. Okay. Now will be the Q&A session. Let's see if there is any questions that people are asking. Okay. So, Mr. Bond, first question. Uh, One of the question is that if using the T.E.S.T method that you shared earlier for short selling, does it work on the downtrend stocks? Using CFD to short.
Okay. So personally, I don't short stocks. Okay. Personally, I don't short stocks. The reason is very simple. Okay. When you are shorting the shares, okay, this is just my very personal opinion. This is just my very personal opinion. Okay. When you are shorting the shares, sometimes you realize that things can move up faster than you thought. Okay. And also shares, especially shares, it can rebound very quickly. So you need to have a take profit point that is very that is working well for you. Again, you are doing short selling. Okay, now the T.E.S.T, by the way, the T.E.S.T is just a process, meaning that you find a downtrending shares, you plot your entry, you put a stop loss upside, and you put a take profit point downward. It works. T.E.S.T is just a process, but for the strategy part, you need your own techniques. Okay, but one thing I can sort of like share with you my experience is usually for stocks. First is I don't really short stocks that often. I think in my entire life I short more than 10 times. Okay, for stocks. Okay, so don't trail. Okay, for stocks, don't trail. It can move up faster than you think. Okay, it can move up faster than you think. Again, T.E.S.T, it works because it is actually just a process. Okay, but for the strategy part itself, you need to enhance it yourself. All right, so that would be my comments on that.
Okay, thank you. Now the second question, it will be if you are going to use moving average for a super trend stock, what moving average you will use to enter a super trend stock, and also for a better stop loss strategy in terms of moving average?
Okay, I like to use 20 as a benchmark. Sometimes for certain stocks, you will realize that they don't work well with 20, meaning that when they retrace past 20. So in that case, you might want to use other, but I think 20 is a good starting point. Now, actually, there's no such thing as the best moving average or like what, okay, and what not. It's actually sometimes you have to back test which moving average works better for the stocks, okay? How do you back test? You see in the past whether or not the moving average act as a good support or resistance for the stock. Now, for me, let's say if you're using 20, I think 20 is a good starting point. If you use 20, when the stock retrace to 20 moving average, okay, and rebound from that moving average, that's when I can plot my entries, and I'll just put my stop loss below the pivot low or below the moving average that I'm using. Okay, that would be a good starting point for you. Okay, now I suggest you to use it on 20. This strategy works a lot of time. Okay, there's a high odds with this strategy. Okay.
Okay,
Yeah.
all right. Okay, thank you. So I guess it just go down depending on the behavior of the stocks. Every stock has different behavior, I
Yeah.
guess.
Because some stocks they just don't respect 20 MA, for example. Some stocks they may respect 30. Okay. But again, 20 is a good starting point. You might want to do your own back test.
Okay. So if any of you have any questions about what Mr. Bong Jeen Hao shared tonight, feel free to ask away. Yeah. Okay. So the next question here will be how to differentiate between a rebound and a bank. A bank, I guess what he meant here should be something like a rebound or like a bank. I'm not too sure what you mean, but I guess should be something like a reversal.
Okay.
Like the differentiate between a reversal and a rebound. How
Oh, a
to
band, BNB. Okay.
differentiate it nicely.
Okay. Now, sometimes when you are in the trade, I'll just be very honest with you. Sometimes when you are in the trade, you cannot, and it is turning up, we treat it as a rebound. We don't know whether it will bend downward. Okay, but the reason why we use pivot low, which is the low point, okay, to set a stop loss as a reference is when the stock, if we enter a rebound, let's say a stock touch 2 ringgit 50 cents and go up to 2 ringgit 60 cents, we buy it, let's say 2 ringgit 60 cents, and we set a stop loss below 250. The reason why we do that is, let's say if the stock were to, we buy at 260, it doesn't go up, it falls down and break 250, 248, 245, that's when we sell the stock, because that is what we call a lower low. So lower low, it could be the beginning of the band. Okay, it could be the beginning of the band. So that's why it is safer to go out first. Should the stock later maybe turn up again, we replot the entries again. Okay, so the moment you enter is very hard to tell. Okay, this is speaking from the most practical standpoint. It's very hard to tell, and that is the reason why we need stop loss anyway. If I know that it's a rebound, it's not a band, I don't need stop loss. What? Okay, so that's why you need a stop loss. Okay, but again, to add some information on that is this: when you are entering a rebound, enter a rebound that is significant. What do I mean by that? For example, if a stock go to 3 ringgit and retrace to 270 and rebound, so you at least have to make the stock go up to about 50% plus minus of the range, like from 3 ringgit drop to 270, and it has to go up to maybe 280, 285 before I will start looking into entering. Now, some people are funny. Okay, some people are funny. When the stock go all the way up from go all the way very steep, okay, from like 4 ringgit to 6, 7 ringgit, and it crash all the way to 5 ringgit 50 cent, for example. From 7 ringgit crash to 5 ringgit 50 cent, and suddenly the stock turned up from 5 ringgit 50 cent to 5 ringgit 60 cent, 5 ringgit 70 cent. They said that's a rebound. Now again, that rebound is insignificant for the amount of fall that has just happened on the stock. So be a little bit more reasonable, okay, when you are judging, okay, whether or not it's a rebound. Okay, so that is what I can share with you. All right. What is the next question?
Okay. This one last question on the Q&A session. So usually after a pullback, because that you have been sharing, how
I think I cannot hear you.
usually enter pullback? Since you sorry, can you hear me now?
Yeah. Just now it
Hello.
sounds robotic. Yeah. Can you hear me now?
Hi. The question here is because yes, I can. Can you hear me?
Okay. Yes.
Hello.
Hello. Yes, I can hear you.
Okay. So your strategy that you have been is it okay now?
It's still very choppy.
Hello.
Hello.
Okay.
It is
I
still
will
very
just
choppy.
repeat
Yeah.
my question one more time.
Okay.
Still very. Okay. What about the rest of the question? The rest of the people, can you guys hear me? Oh, choppy. Okay. Is it my internet? All right. Okay. What about right now? Is the voice okay right now?
Still choppy.
Yes. Okay. I just your voice. Okay. I guess could be my internet problem. Is it my internet problem? All right. Is it okay right now? Oh, just speak louder. Okay right now? Okay.
Slightly better.
I guess yeah, okay. So the question here is because Bong Jeen Hao, your strategy is always to buy on pull is never really to buy on pullback because you are trade
Cannot hear.
cannot hear. Okay.
Mm.
Oh, it's okay. Oh, we will answer this question finally. Okay. I guess we will just proceed to the uh our promotion. Just about our okay. Yeah. Slides here. I think my internet having problems. Okay. All right. Okay. I can hear now. Okay. Just to let all of you know about our promotion. Having a CFD where we are giving out $USD of 0.3%, and by trading our US CFD lucky draw by winning first prize of iPad, Apple Watch, or even AirPods, okay, and some other cash reward, let us know, and we can let you know in details about the terms and conditions personally. Okay. Open account online. You can scan this QR code or go to our website and try to click on the online account opening, and you can do so at the comfort of your own homes. Okay, upcoming events, we have another CFD webinars by Mr. Bong Jeen Hao, okay, which is how to leverage your portfolio with a proper risk management. I think Mr. Bong has shared earlier in his webinars, just now sharing earlier that he will be sharing a lot more in-depth details on how to manage your risk in these webinars. Feel free to scan the QR code to register. You can register from our website. We do post in our website. Feel free to check it out. Yeah, and also, yeah, just to let all of you know, we have a Facebook page, YouTube channel, Telegram. If you want some statistic info like the FCPO, import, export, output, production, etc., etc., we have been posting it very frequently on the Telegram. So feel free to check it out. And also just to let all of you know that we have been sharing a podcast every Monday just for 10 minutes, 2 o'clock in the afternoon. Every Monday, 2 p.m. in the afternoon, we have been sharing what the market has been in trend for the coming weeks or what to look out in the upcoming weeks. Yeah, all of you can try to like our Facebook page at Phillip Futures. Yeah, there are a lot of information that we have been posting. Okay. If you want to contact us, these are our contact emails and office numbers for all different branches. Feel free to contact us if you want to know more about these great products, CFD trading. Okay, yeah, we allow our clients to trade both Bursa and US stocks with a very good leverage. All right, with that, thank you everyone. Thank you for your time joining us tonight, and thank you, Mr. Bong Jeen Hao. So I guess we'll call it a day, and that's it for tonight. Thank you. Bye-bye.
Bye, everyone.